Hi, Sam from Teach the World to Trade. You should know me by now. And this is our recap for Unit 3 of our Learn to Trade Like a Professional course, which is the second part of the trade process, execution. This is probably the most important part of trading, right? You've got to trade. To become a trader, to learn the markets, to succeed in capital markets and any sort of trading, you've got to have what we call skin in the game, and that's, you know, learning from your trades, putting trades on. So this is a recap. I hope you remember a few things, and if not, hopefully this is going to help. Okay. Executing a trade, part two of our trader process. So we've identified a trade, and then we've got to do something with that hard work that we've done. So we've got to turn those ideas into action. We've located a trade using technical analysis or fundamental analysis, or however you want to find it, seasonality, checking the order flow of the market, and then turning that into action. So ideas into action. This is the biggest thing for most humans, really, is turning their ideas or their thoughts, not just trading, into some sort of tangible action. It's kind of the biggest blocker for us as humanity to get things done. So yeah, this is your sense of urgency and your drive, and that's why we spoke a lot about motivation at the start. Taking that motivation, those ideas, and then pushing them into doing something. Getting out your comfort zone, which trading is, because you're taking on risk. Essentially, it's like most things in life, you take on risk, you're going to be a little bit nervous, but you've got to push through that. So turning those ideas into action. Identify a trade, execute a trade. Three core components of our execution. We've got to enter our trade, we've got to get in, and we've got to get out when we make money, hopefully. And then if we don't make money, we've got to stop out. Okay, so there's three core components: getting in, getting out for profit, which is our exit, and then our stop, which is if things go wrong, which inevitably they will, but that's okay. It goes wrong for all of us. It's not guaranteed every trade. Getting in, entry, exit, stop. Three core components you've always got to have. Traders fail, especially retail traders and traders professionals, right? If they don't look after their downside, which is managing their stop. We discuss market orders versus limit orders, which is eternally confusing every time I've taught it for some reason. But a market order will go straight to the market and buy or sell at the market, whatever the price. So if you want to go long and you want to go long straight away, you want to buy straight away, you've got to go to market, bang, buy. If you want to sell, if you're desperate to sell, urgent to sell straight away. Now, when using stops, I think I suggested using market stops because they work on all three of your order types, your process, or your entry, your exit, your stop. You either, for each of them, have a market order or a limit order. I think for your stops, I'd say limit order. I mean, especially if you go onto a simulator, stops for a market order, entry for a limit order, and then exit for a limit order, I'd say. That would be best to get you going from the start, and then you can change it. I mean, what I'm teaching you throughout the course, everything I'm teaching you can be adjusted, to traders' choices. I'm getting you to a point where you're practicing safely, and then you know what things you can adjust. So market orders and limit orders are something you can adjust, as are the entry, exit, and stop. These are all down to you. These are the variables that you control. You can't control the markets, but you can control all of these things that you are doing. Your actions you can control. Spoke about risk versus reward. This is very important. We were looking at ratios of how much you were going to gain versus how much you were going to lose of a trade. We were saying typically you want to look at a minimum 2-to-1 ratio, which is you're trying to make, for every pound that you risk, you're trying to make £2. Okay, for example, the higher the risk reward ratio, the better. You could be looking at 1 or 2 trades a week where you're looking for a real high risk reward, 2 to 10 or something like that. For every £2 you risk, you could make 10. That's what you're looking at. But this then feeds into those goals, and we were speaking about goals in the first workshop. Why you want to trade? How much do you want to make if you're a trader? How much are you going to risk? What are your goals? And then this then feeds in also to your trade size. This is all the story and the narrative of your risk. Okay, your risk versus reward, what you're trying to achieve, and how much trade size. These things that you are controlling, right? What you're trying to do every day, every week, every month, and then that feeds into your trade size, your risk versus reward. Super important. It's all intrinsically linked. And then practice, 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 right? We said you can't learn to play golf without hitting any golf balls, right? You can't learn to trade without doing any trades and running through your process. The first two parts of your process, you should be doing them each time we finish a workshop, practicing your technical analysis. Now we're practicing our technical analysis with a little bit of execution. I'm going to do a further video, which I'm going to send out to you, where we're going to highlight how we can just simply put those executions into practice using TradingView. Very simple tool, super easy, where you can adjust your entry, your exit, your stops, look at your risk versus reward, and work stuff out from there. Okay. And this is your challenge for the next coming week and ongoing, really, is identify a trade using a simple bit of technical analysis or fundamental analysis, and then execute it and have some ideas for us to talk about and post them on the Discord channel. There's a specific channel there where you can post your ideas. I'm going to post a couple up throughout the week and get your feedback from, and yeah, we can go from there. We can all start helping each other identify and execute trades. And the aim being the community over a 12-month period, 2-year period, we'll be there helping each other out, finding these opportunities. Even then, when we haven't got time to look at the markets as much as we hoped, we can help one another out to find those opportunities where we can all succeed together. Okay, so that was our recap. Thanks very much for listening as always, and I look forward to seeing you on the virtual trading floor in our next workshop. Okay, see you soon. Stay lucky.